you all are well and doing great. And we are actually right now about to hit the most dangerous seasonality window of the year, just as tensions continue to rise in the Strait of Hormuz. President Trump now saying that the strait is theirs, they're putting back up the blockade, and that any cargo passing through must pay the United States 20% in order to pass. Interesting times and right on time. You see, especially by the way, during midterm election years, we are in the thick of it over the next 2.5 months. How is this going to affect the release of CTM 2.x V5 Plus right here with the universal settings out on our sectors? We're going to get into that. First, a little housekeeping over here. We just added over here 3 new templates to CTM 2.x V5. It's Tesla O2. That's the buy and sell side. It is Google and Amazon. Going ahead over here, you could look how Tesla here on the short side is able to really just grab these trends and then pivot out of them so beautifully. Unbelievable potential opportunity over here. Look at that. I absolutely love it. Ace, that trend, my short settings over here translates into many, many, many other tickers, markets. I'm sure you're going to appreciate that. This is the buy and sell side, and it looks juicy. Google able to outperform buy and hold. This is coming back since I have 2015 over here. I don't know why. Amazon looks pretty good over here. Another thing for you to consider. I know that Brownie Brown is like, looking, I just want as many templates as possible because we talked about the diversification amongst our templates and the alpha that provides. One of the You guys see that here, we're making enormous progress and we're doing it really quick. Well, it's V5. Well, that's irrelevant. I mean, does it really matter, Cap? No, it's V5 plus because what is added to it is specifically here at the end, and you'll see you have the volatility regime filter. So it's just one filter that I've added to the V5. By the way, that's really, here we go. Boom, boom. This is insane. So to that spirit of Brownie Brown, and I haven't yet. I haven't yet added. For example, we can make this an 8-panel view. Tesla could have both on the same Tesla ticker. Add another 2 panels over here. But we rolled out a bunch. That's why I took Friday off from our session. I was just absolutely head down, grinding hard, long hours, building all day Friday, Saturday, Sunday. Here we are. And a couple of things to continue with in that spirit of Brownie Brown. And listen, I think that the more V5 templates we have, the greater the opportunity here to diversify. One of the things that is in the process of now being built is going to be here on the dashboard for all of you, or however that works out, to the ability to run the engine on the website on any ticker you want, and then the way to generate templates will be like that. So that's super exciting. Don't ask, like, I'm working on it. Obviously, I've been working on a lot and getting a lot done. So don't worry about it. When it's ready, it's going to be ready. I don't know how long it's going to take to build. Maybe a couple of weeks. We'll find out. Buy side boost off the bottom is going to be juicy. Let's just take a quick look at our positionings over here. Dashboard seems to be completely in sync, except for I don't see the open position P&L. we gotta figure that out, guys. Look, jumping back over, we have Tesla currently in an open position, and you could see once the stop loss changed to 0.2%, it's updating over here on the panel. That's the update. That's one of the updates that was pushed through over the weekend to make it, well, just a lot easier to follow off of the panel when we see the stop exit engaged. Tesla's the only, this is how we're positioned. This is how I'm positioned right now coming into what is historically the most unfavorable seasonal period. Now, just because it's the most unfavorable does not mean that it's going to continue to be that way. You never know. That's why we have our positioning. Stocks here largely on the sideline over here, significantly into cash. We see that Ethereum is still long over here on the buy and sell side. Everything else on the sidelines. Buy side boost. We have a closed longing pending now. This is for once a day, even though it's traded on the 6-hour time frame, architected by Don Scholl. You can see that closed long pending, now engaged, and Ethereum is still long. We are seeing alts here continuing to lead from a momentum standpoint, and then buy side boost. We see that Ethereum here is riding the position, and that is where we are as far as our current open positions. And this is where it gets a little bit awesome. Let's go ahead and continue. Market's under pressure, by the way, and is that because of what is taking place as far as the re-engagence of a heavier fight going on between Iran and the U.S. Has anyone noticed or noted that we've seen Gulf states engage? We haven't seen Israel engage. So this seems to be, I would say, orchestrated by the U.S., and they're running the show. We are seeing, this is hyperscaler cash, 12 months going forward. Oracle is the outlier, right? They're the ones that potentially could be in a lot of trouble. And when it comes to, how I go, I prefer the strength and the leaders rather than going for the long shots. If I had to pick between Alphabet and Oracle, I'm going with Alphabet. Maybe Microsoft seems to be somewhere in the middle. Nevertheless, the problem is that is probably weighing on the markets more, or perhaps as much as what's taking place in Iran, is that we're seeing a lot of, recently we saw Alphabet go to market to raise in the debt markets 85 billion, and then we saw even Nvidia go ahead to raise $20 billion. And then you saw Amazon go to the market to raise money. And we're seeing that the bond market, the debt market, is not as willing at this particular point in time to allow the hyperscalers to raise money at favorable rates. So how are they going to continue? Is the question you have to be asking right now, is how are they going to raise the money that they are insistent is necessary for their continued capex spending, their build out of the infrastructure they think is vital in order to be market leaders in the future. So this is a bit of a turning point. It's being processed. Another bit of a turning point that needs to be processed is right now, ever since the US government took Fable, Anthropic's Fable, offline, even though it's currently online, it was about a 3-week hiatus in between. Right now, supposedly, they keep extending it by a week, but right now it's to the 19th. Fable will be accessible on plans outside of additional usage. Take advantage of it if you're able. But the point is that ever since that happened, people are like, whoa, how could my business be relied upon a LLM that could be taken away from me at any moment? And then the additional thought in that conversation is, well, at the same time, I'm feeding my proprietary data to this LLM, and much like Amazon did that to a lot of their retailers, to their vendors, they would just see what's selling well, go ahead and replicate it. Is that the model of Anthropic and OpenAI? That's the conversation that's being asked, and likely we're going to see a lot of companies. This is why CEO of Palantir made the rounds and at like a rant like a lunatic. He's trying to sell his own business. He's looking at open models, run NVIDIA entering the space with a pretty good open model capability. What they plan on doing is now offering this to a lot of different enterprises. We're going to see, obviously, if this happens and we see the adoption go towards local hardware, I mean, there's still a massive amount of hardware that needs to be purchased for these companies. Does it go from the hyperscalers laying out the capex into a more diversified, where every S&P 500 company needs to go ahead and have a very large build out? This is where we're at this mid-cycle AI consolidation, and the market's trying to figure out actually how this is going to work out. So let's get into the heart of today's session, and that is, of course, our CTM 2.x V5 Plus edition. And this is amazing. This is the first time we have universal settings. And why, and in my own, why these results backtest absolutely outstanding. Why it's difficult to argue with that ever since CTM 2.0, CTM 2.x V2, CT, like the forward testing has continued in real world. However, there has to be, and especially as more and more variables were inputted, that fitting, and not in a good way, in an overfitting way, has to be involved, right? Especially if you have someone just clicking through inputs, trying to like fit to what works. That doesn't work. That doesn't work at all. And then you move even forward down the line, and if you're using things like TV Opto to just go ahead and find the best parameters, well, you're just kind of probably overfitting with the additional parameters, and that's not going to work out well. So while some people look, we want to make the tools available in order to find out, and then you have that forward testing window, which is the most valuable. But what we've done here with V5 Plus is have a universal setting, and that takes away the probability of fitting by an extraordinarily wide margin. Now you're not going to get like the same performance. Here's let me go from like 2020, right? And let me see probably in a highly fitted model, we could probably get some ridiculous number here. Probably get some ridiculous number. Except this is not fitted in a sense. This is the universal settings, and highly outstanding. Look, what we're doing here, and I want you to just go ahead and see this really quick, not only where we are in the window, which as I begin the position sizing explanation is going to really be helpful for where we are right now, but check out this little stat. 100 years of stock market from 1926 through 2025, 30,000 stocks analyzed, and just 27 of the stocks outperformed the market. So what that says, first of all, is selection is important. And if you look at, and you have over here, if you want to download the sector list that I've built, you could build any sector list that you want. That's the beauty of the universal settings. You could build, yeah. You could pick it up from there, Hypanova. Um, Sector list. You could build it as you wish, but we have, or we're talking about only 27% of stocks able to outperform the market. One of the edges that's being layered here is, first of all, the most important is 2.x V5 plus. That's the single most, because knowing when to be in the market, when out, and on what side is absolutely everything. Another layer, though, you want to have the most advantages in your favor is, I've built sectors that I believe are going to, over this next era, continue to be outperformers and leaders. And will that be semis in the next, you know, intermediate? Likely not. They've come off such an amazing run that likely they're not. Is the leader going to be, you guys all added in the biotech? Is that going to be the leader? Probably, probably. There's a good chance of that. But we have everything from biotech to copper, to fintech, nuclear, quantum, space. Robotics, I think, is going to be a massive leader in the years ahead. Cybersecurity as well, defense, software, data centers, and then we have power, extremely important going forward. And yes, photonics. I believe networking, that the hyperscalers and the AI leadership, Amazon, Google, extremely high confidence on my end on these. And yes, in this world that we're living into, semiconductors will continue to be, in my belief, one of the most critical sectors. And then along with, I've added what I believe is the sectors that I want to focus in on in this particular moment of history. It might look different for anyone else, and it could. So now what we're doing is we have the first layer, which is V5 plus. The second layer, which are the basket that you choose to use. And then the third layer on top of that winds up being, well, the money management. Let's take a look at that. So I was looking at some comment over there. I was just trying to think if I missed yet a piece of the puzzle. That diversification between the number of instruments you're trading and also the sectors that you choose, and then the position sizing. So you see over here, you have this calculator, and I'm going to show you exactly how to use it right now as we begin. There is an explanation over here for you to go through and understand. This is the actual position sizing that I am going to use. By the way, using this, my sector basket, and the one thing that's not included in here is the biotechs. No, maybe they are. I don't know. I'm not positive in this moment. Been doing a lot here. And this is, let's just call it a basket of 50, because that's exactly what it is, at least, of the sectors that I'm using. And you could see how that back tests using my own particular position sizing. And I went through many different possibilities of the best way to look at position sizing. You're going to see what we came up with. But this is what the back test looks like. And you're looking at so total from 2019 to present, roughly a 39% year CAGR with a 27% drawdown. By the way, that becomes radically different if you are choosing to be more aggressive than myself, and we're using a sleeve of 70% of your available account, 80%. The drawdown doesn't get that much worse, but then it becomes like mid 30%. And or maybe a little bit higher. And the truth is, you don't know what happens in the future. If you're listening to Dr. Michael Berry, the world's about to collapse. And if that were to happen, whatever your projected max drawdown it's likely going to be higher. So I think that when you're able to potentially generate a CAGR in this neighborhood, that it makes sense to be safe and diversified, in my opinion, because that's absolutely incredibly outstanding. And by the way, this is like one layer of the diversification of portfolio. You have obviously the Bitcoin and crypto. I haven't put on the sell side. And by the way, there was one great question on the YouTube comments that I haven't forgotten, and we'll continue probably pick that up tomorrow on, when you're looking at always holding and then hedging on downside momentum. I will be picking that up. This was the most important thing to focus on at the moment. So here we are. And then you're looking at like the bear market of 2022, max drawdown 20%, still positive on the year. It's pretty exceptional. You had during the 2020, the late February and March crash of the market, still 20% drawdown. I mean, the rest of the year wound up being pretty good. During the tariff tantrum, the 20, you remember that markets got demolished in the beginning of 2025, 27% drawdown. It's the largest there so far, and the rest of the year wound up being absolutely fantastic. Now let me show you how you could use this on your own. Everyone who's using this calculator, like whatever you input in here is going to be saved on your end, right? So let's say, for example, that the default here is set for 60% sleeve. 60% of your available account is what you're putting to use, right? It says the position cap 25%. What that means is that no position will ever be or make up more than 25% of your account. It's traded off of the breadth ramp K means how many of those positions could be at that amount. So you have 4 here. Now, in light of this, and I would say, from my belief, and again, this, and you're going to see how it works now, the position sizing. I would say, well, this is the way that I am executing. And I'm also going to show you the one difference that I am making now in light of this window that we're currently undergoing, and also because it happens to be the midterm election year. Now, I did check out what it would be if you did this every single year, because this window exists every year and it does not improve your drawdown at all, and it degrades performance. I will not be doing this at any other time except right now. But what I am going to be, or how I am going to do, what I'm going to do is I'm going to start the execution here off at 40% instead of the default 60%. At any other time, that's outside this midterm election year window, I would, if starting out, start off at 60. That's number one. All right. What I will do over here is after Labor Day, so the first week of September, I am, regardless of what's happening, this is already set. I'm going to change that then to 50%. And then October 15th, regardless of what's happening, I'm going to change that to 60%. So I've already committed to that. All right. So I'm starting off at 40% right now. This updates automatically every day. And then weekly, it's going to update, because weekly you're going to have to also go ahead and the current positions are going to adjust, and you have to adjust them weekly. It's traded off the daily, which makes maintenance really easy to do. I'm going to go ahead and clear everything out over here, and I'm going to go through the list with you. So we'll start at the top. At the top over here, we have Micron Technologies. And if you're starting now, how do you enter into the market? And it's the wrong assumption is that, well, you just take all new signals as they occur. The correct thing to do is enter into these positions as they are today. And that's understanding that, like, here we've been open for I don't know, 60, 70 days, right? Here's how you do it. You have a couple of different inputs. You'll notice the age session and the 20-day volatility. I wonder if we have over here Doggy Nation, sorry, and Olin 22 saying, look, if you have the universal algo, you can then filter for the volatility required over variable time deviations so you know what to be trading right now. Well, this is input. I'm curious to get your input, but this is inputting that in a way for the position sizing. Again, you have to read everything over here to understand. I'm going to show you how to get going over here. So the first thing that you do is you see what has an open trade right now. So MU has an open trade right now. You set the balance to whatever you want. For example, if you're setting your balance, we'll start at 50,000. We're only using 40% of that. And the first one is MU. And then it says the age session. You come down here, you read, okay, 63. And then 132.13. 12 is the 20-day, the historic volatility. So you're going to add that in, and then you have to add in one more thing, the price. So the current price, I can see it up there. I'm just going to put the real-time market price right now. So I'll put 90. So that's number one. That's the first position. And if you only had one position in the market, the weighting would be 25%. And that would be 2.5% of the account when you're using 40%. Okay. Next. So very easy, right? Age of session, 20-day vol, which is historical volatility. You're able to just follow whatever it is. You entering the price. I was just reading up at the top tab what the price was. Next, down the line, I'm going to go to Western Digital and see if it's currently in the market or not. I see it's not in the market, right? Move it along. STX, out of the market. NVIDIA, currently out of the market. AMD. So we see over here that this is holding on to a position 119% into the market. Listen, the exit is multiple. It's a regime change, and it's also if stop exit is executed, adding into a trailing. So right over here, I have the age is 62, 92, and the ticker is AMD. So you're going to go add position, AMD. I thought it said 62. I'm not sure. Let's say 62 and then 92.29. And then the price is currently 538. Okay. Now you can see that we have two positions. We have, I'm going to add the next one. Let's continue going. I want you to see once we get past 4 positions, how the sizing is going to change of everything. So before you enter an order, fill it all up. So here you could see the entries over here. You could see a stop exit long pending. And currently right now you have the stop in at 297.9%. All right. So that just entered the market also. It says 1 day. It's only been in 1 day. So I'm going to go ahead and I'm going to enter it in because it's a trade. If I was entering in the market right now, exactly how I want to do it, I would just set this entry here with the trailing stop loss as it happens. So let me go ahead and add it in over here. And we have ARM session day 1, ARM 1. The 20-day volatility is 114.52. And then we have the price at 300. All right. And I'm gonna add a few more in because I want you to understand how to do this, and I want you to see as we get to a few more how all the weighting is going to change. By the way, if you add in all of the open positions now, because you're starting now, you're going to see that Jazz, the biotech Jazz, has the highest weighting. All right. And what's really interesting about that, because it's off of the historical volatility and how many days it's been open, and its historical volatility is less than, for example, Micron. They're open probably roughly the same amount of days, and it gets a higher weighting of the position. It's really beautiful position sizing, money management, all wrapped into one. Let's go ahead and add AMAT at 68. So the historical volatility, the 20-day is 115.7. And then the price is currently 575.22. All right, so now we have 4, and they're all weighted the equal. As we add the next position, that's all going to begin to change. So we have, let's see, Taiwan Semiconductor currently open. Also here, you could see that the stop exit long is pending, looking to lock in some gain over here. So I'm going TSM. The age session is 55. You can see the turn of the market happening right now, potentially 71.11. And the current price is 425.12. All right, now you can see that as we add this in, that we saw ARM go down to 3.6%, and TSM is taking 25%. You saw that MU, that high volatility, being reduced over here. So every time you take a new position in the port, like if you set up here, pretend there's 30 open positions or 20 open positions, and then tomorrow there's an exit and or a new position added to the portfolio, the weighting will change, and you're going to continue to change the weighting of your portfolio. So it's a rhythm. It's once a day you have to do that. The orders and the reweighting, the orders and the reweighting. You also see the age sessions will update automatically once a week. That's also going to change that weighting. But once a day, you'll have either a new opportunity to adjust your portfolio. Let's continue over here just so we can see a little bit more of the dynamics changing over here. And again, someone could decide that, well, I'm going to use an equal weighting across my whole portfolio. I have 50 tickers here in the sectors, and I'm going to use a flat 2% position across all. You could do that. It's completely up to you. It's not going to be the performance here is substantially better because of the dynamic position size that's taking place. But you could absolutely do that however you want. I'm showing you how I am doing it. So you can see stop loss. See these positions beginning to be locked in over here, potentially. Flipping back and forth, but let's add it in. We have ASML. We have, and then I'll go to a different sector next so we can get a different thing going on over here. 34. I just wanted to show you how you would get into the market if you were out of the market. 75.58. And then the current price is 1742.07. All right. So I'm going to skip down over here. And if you are trading full sectors, the sectors that I have chosen, if you're trading all, say, 50 tickers, 50 plus tickers, then you have to go through every one right now, find out what's open, and add them in. A lot of exit long pending over here. I'm jumping down over here to add into the biotech. All right. I don't trade LABU. It's a 3 times levered position. I'm actually going to remove it here right now because I don't want any levered products into this. So we have CRSP, not in the market. Lilly. So we have Lilly in the market here, and we're looking at 32 days. LLY, 32, I should say sessions. And then we have 4036, doesn't count weekends. So sessions, and then a price of 1190. I'm going to add some more over here. I'm going to add Jazz. Jazz currently in the market, 105 days. So it has that age session building up over there. We have 30.22 for historical volatility. And then we have the price of 237.77. All right. So now you see Jazz kicked up to 25%. Remember, MU started off at 25%. You see it coming down substantially now, and nothing else but Jazz is at 25%. As you continue to add I think that's a good tutorial to help you understand exactly how, if you're just starting today, how to add into your positions, what the dance looks like, the process. If you were to add in another 15 tickers that are open right now, you're going to see the weighting of the portfolio drop substantially across the mean of the portfolio. I think Jazz drops to like 17%, and then you see everything else somewhere around, let's call it 2%, right? And then you see if we hit all of a sudden Labor Day, whatever positions are open, I'm going to change this then to 50. So you can see over here, we have right now invested $20,000, cash 30,000, and then you could see that change over here. So you could see the dollar amount, right? So on September, Labor Day, is it Labor Day or Memorial Day? You go ahead and add it in, and then that next day, I'm going to have to recalculate the weighting of all my positions, right? So I'm going to be adding to each one position whatever the correct weighting is that time. And then as I move towards October 15th, I'm going to go ahead and do the same thing, and I'm going to be at then the 60%, and I'll have to readjust to however I am at that particular point. So that's how you use the position sizer for CTM 2.x V5 Plus with the universal settings. That's how I'm using it. I haven't had the opportunity or the chance, and it's something that I would like to do, is to go ahead and look at what does that look like on, for example, buy side boost. Now the problem is, or maybe it's the issue is that when you're using, for example, a max position cap, and if it was buy side boost 3 positions, I would likely change that to 33%. But since there's only 3 tickers, I don't know, maybe you change the breadth to 1. I don't know that it's going to be as functional. It probably won't. This is the advantage of having a complete list to be able to diversify in with. So I leave it to you to begin becoming familiar, for you to explore, and however that means and whatever that means for you. But my own personal belief is that the 3 layers put on over here are going to drastically diminish any type of semblance of overfitting, that being fit too tightly on any input. And this is going to be able to be an exceptional way to approach the markets. Any questions? I guess it begins right now in this moment, opening up a discussion channel inside the Discord for V5 Plus. At the same time, I'll link the CTM position sizer tool, which is the link for the dashboard for everyone. I have no plans on at any point in time to put in a dashboard for this. Probably adding to the dashboard of open positions, though, the Amazon and Google and Tesla O2. But I could just every day continue here to show you and the dance that I'm going to keep my open positions, and I'll keep there tracking it here. So on the streams, they'll be able to kind of do that. For now, everyone, that's a massive dump for CTM. Unbelievable progress here. I said, or I believe I called it a vertical leap up, as we begin now to go ahead and consolidate this next plane up until I get at the tool on the dashboard for each and any one of you to be able to model whatever you want. For now, everyone, I'll see you all back on the inside. Have a beautiful day. Summer sessions. God bless you all. See you on the inside.